Hey, good morning, Robert.
Hey, good morning.
We got a lot of likes yesterday, new subscribers yesterday, and a lot of people are telling me I had the mic too close to my mouth. My voice just carries.
Yeah.
I'd get in trouble all the time because I'd be like 3 rooms away from somebody. They're like, "What?" I'm like, "What? You're talking too loud." I'm like, "Well, that's just my voice. It just carries." I hope you all enjoyed that song. Maybe I'll do one next week.
I thought you were doing today.
Nah, I don't know what one I do. Because I need to get right into it. But hey, a lot of people are asking to see you. Come here, Romeo. Rob, can you put the camera? Can we kind of like just maybe without turning us off? Let's show. Come here, baby. Come here. Come here. Everybody keeps asking me about Romeo. In fact, one person said, "Hey, there he is. There's the guy. This guy does not leave my." There we go. We got him. Does not leave my side, and yeah, sometimes you might hear him going snoring over there on the right. Yeah, but I can't even go to the bathroom out this dog. He's like sitting there, and it's so funny because when we go into the restroom,
Yeah.
and there's a lot of people on this floor. Romeo, I'll have the door shut, of course. I have to take the big stall because this is a big dog, right? I get in that little one, I feel like, I can't move. But anyway, Romeo's in there, and all of a sudden I see his eyes underneath, seeing who's coming in. And there's some Asian folks down the hallway, and I hear the door open, and then I hear the door close. They're like, I ain't going in there with that dog. It's too funny.
Yeah,
Anyway.
he's definitely on your hip for sure. He's a good dog.
I'll tell you something, Rob. I never was a coffee drinker. I never drank coffee until just the other day.
Until yesterday.
I'm 62 years old, and honest to God, I never drink coffee. Being brought up in a Mormon religion, caffeine was against the rules, right? Caffeine. So when we were kids, instead of drinking anything like that, we drank Kool-Aid, water. We didn't even get sodas because it had caffeine in it. So to this day, I don't even drink caffeine sodas. Yeah. But Rob introduced me to this magical fixer.
Espresso.
Called espresso. And I don't get one. I don't get dos. I get tres. Three.
Three shots.
I get 3 shots of this stuff.
It's pure rocket fuel. It's some good stuff.
I tell you what, if you're ever feeling tired, so I'm hooked. I'm like, every morning I got to have it. And then the other thing is it takes away your appetite. I was shocked.
Oh, man, this is great.
It was unbelievable. I was really shocked. Anyway, I want to get right into it.
Yeah.
And, we were covering a little bit about the BIS yesterday, and some people are, like, wanting me to touch on a little bit more of that. So today I'm going to talk a little bit about mortgage-backed securities, the BIS. And before 2008, almost no one ever heard of mortgage-backed securities, and they call them MBS. So when I say MBS, you'll know that stands for mortgage-backed securities. However, after 2008, almost everyone knew that word, knew the term MBS, and it became common knowledge that the MBS market developed a severe liquidity crisis that took down the world economy. And that actually taught us a lesson, and it would never become, how do I want to say this? It taught us its lessons, and we would never become over-leveraged in mortgage-backed securities ever again, right? Well, I don't know how to break it to you right now. But, Rob, the Bank of International Settlement, the BIS, the central bank of all central banks, quarterly report states that there is a $10 trillion MBS liquidity crisis that is rapidly mobilizing again. This is on top of what we were talking about yesterday.
So that's about 90 trillion.
Right well, there. And never underestimate banks, governments, and individuals to relive the same mistakes. So what is happening is the question. Well, the yield spreads, what we call a yield spread over the MBS over U.S. Treasuries, are highly volatile compared to the last 35 years of data right now. And right now what we're seeing is these central banks and other large purchases have left the MBS market. and small retail investors from mid-sized funds and non-bank institutions, they are the source of the liquidity in this MBS market. So in order for them to be funded, we're talking the sources of these funds come from these small retail investors and these mid-sized funds and these non-bank institutions. Well, the problem is that those small investors and those mid-sized institutions are the least liquid option in this $10 trillion MBS market. So the inevitable liquidity crisis will force a fire sale and a rapid price decline. What does this sound like to you, Rob? This is not good. This is
Max Payne, for sure. It sounds like Max Payne.
Yeah.
It's unbelievable.
I mean, here we go, a fire sale, meaning that they're selling. And let me go on and share a little bit more with you. How did we actually get here? Well, the pandemic created this perfect storm, and these interest rates were low, and housing prices then just exploded. And homeowners actually wanted to capitalize on their newfound equity, and first-time buyers actually feared the missing run-up. And then mortgage companies were writing many new and refinance loans, and also the government then put the moratoria on evictions and guaranteed loans. And the sheer volume of loans and guarantees by the government made mortgage companies look very attractive. And then these lockdowns and decreased labor market then prompted the government to flood the system with cash, right? All that cash that was out there. Well, the Federal Reserve then printed trillions that needed to be backed by a debt instrument, with 30% of bonds being purchased by these MBS, by these mortgage-backed securities. So the Fed is now in what we call tightening policy, where they're raising the rates, and they're selling the assets on its balance sheet. Remember, they want to get rid of their assets. They want to bring their assets down, is what they say. So as interest rates rise, fewer people actually can afford mortgages or even refinance. And refinance applications now are down. Listen to this. They're down 80% right now, Rob. Applications.
I mean, it makes sense. Why would you want to refinance at a higher rate?
Actually, number's wrong. 86%.
Yeah. I mean, it doesn't take a rocket scientist to understand
Not at
that
all.
If I refinance my home at a higher rate, I may default eventually in the future. Right?
Yeah. No, it's true. And let me tell you something else. And new mortgages are down 40% right now from 1 year ago. And Fannie Mae said October consumer confidence in the housing market was now at an all-time low. Wow. That's Fannie Mae talking now. And every transaction needs a seller and needs a buyer. And the Fed purchased trillions of dollars of these MBS during the pandemic. And now, what do they have to do? They have to unload them. They have to sell them in order to get the cash out of the system to actually slow inflation. And if the Fed is the MBS seller, who is the buyer? Have any idea? Who wants to risk their money on MBS securities when the mortgage market is actually falling apart? And then it's going to start to even get worse. Who would want to do that? So pardon me for overstating the obvious, right? And suppose there is no buyers.
Well, then you have an all-out default.
Meaning that the Fed can't liquidate the asset.
Exactly. There's no liquidity.
So
you have no buyer.
Exactly. And the world is staring down another MBS liquidity crisis.
I mean,
we talk about this all the time, about liquidity.
That's true.
Banks getting short on liquidity.
Yeah.
Right?
Right. And this is like what we share with our clients every single day. Who's to say that in the future you won't be faced with the inability to actually sell your bonds, sell your stocks, sell your mutual funds for the same cash equivalent on the opposite end. It's scary, but it seems like, and it's exactly what Marko Kolanovic said. You know,
J.P. Morgan Chase's top analyst.
Top analyst, exactly. He said that we're headed towards one of the largest liquidity crises not seen since the Great Depression, right?
Well, he's right. Listen, and let me tell you where this is going. This is like the buildup, like we saw in 2008, but guess what? It's only big and almost impossible, and the financial devastation even more severe.
Well, you also have to look at it from this aspect. Think about the $2 quadrillion in synthetic derivative shares, right? That massive banks have right now. 2.5 quadrillion. You have to look at this 10 trillion in MBSs, right? And you also have to look at, more recent, the unaccounted $80 trillion worth of loans that are in the form of, they're calling them derivatives as well. I mean, they're basic loans. The FX swaps that we spoke about yesterday that the Bank of International Settlements just found off of their accounting sheet.
$80 trillion.
Hidden. So now you have 2.5 quadrillion in synthetic shares within banks right now. These are weapons of mass destruction, right? That's a quote stolen from Warren Buffett. He calls these derivatives weapons of mass destruction. Now you have 80 trillion unaccounted for by the BIS. Now you have 10 trillion in MBSs. Now that the BIS says that we have, and now you have 2.5 quadrillion. This is a massive implosion of debt, implosion of synthetic shares.
But
scary times.
So let me ask you. So what now? Well, let me share with you. And this is all coming from our friends over at the Gold Council, by the way. And let me share this with you. The BIS hid this information about the growing MBS liquidity issues in plain sight. I mean, it was right there for them to see it.
So this is something also unaccounted for.
Oh, this is what I'm trying to say. This was right in plain sight, Rob. And hoping, listen to this, hoping that no one would even notice it. But guess what? The BIS allocated 5 small paragraphs, almost a side note, in a 90-page document. And these media outlets then picked up on another story in the document concerning $80 trillion off the books, high-risk currency swaps, posing a systematic risk, but have been silent about the MBS admission. Yeah. So this is just on top of it.
Yeah.
And
guess who bought it to you first, people? Alan and myself spoke about this.
Crazy.
We spoke about this on Monday. Come Friday, there's more unaccounted funds.
Listen, this $80 trillion currency swaps, it is a legitimate risk, but tools are available if defaults start happening.
The tool, you know what that tool is? Roll it over and print money.
Let me give you an example. The Fed could extend the duration of the swaps, like you just said, roll it over, like it did back in 2020. Well, we saw what the heck happened to us in 2020 as well. Extending the swaps doesn't solve the problem, but can kick the problem down the road for a couple more months.
Kick it down the road.
Hey, what was it? Janet Yellen, they all said that this inflation was transitory. They kicked it down the road.
Yeah.
And then it became obvious to the public, to us, that we all knew it already, but that it wasn't transitory, that it was here and it's here to stay. And guess what? We're at the end of the month. People are going Christmas shopping right now. I bet there's a lot less Christmas shopping going on.
I know for me, there's a lot less.
Really? For you too?
You know how I am. When it comes to birthdays and gifts, I go all out. Right?
Yeah.
I go all out. I would spend as much money as possible to make people happy.
You took your son to Hawaii.
For his birthday, yeah.
And had a good time.
Yeah, but I mean...
You took him to Walt Disney.
Believe
it was woke when you took him.
Believe it or not.
But now it's getting a little...
Hey, I'm going to tell you something. Just on a side note, if you ever go to a Disney resort in Hawaii, and this is pretty rude to say, expect there to be basically naked mothers and naked women throughout the entire place.
Wait, what do you mean naked?
They're basically undressed the entire time. Nothing but these like bikinis where they're showing their ass cheeks and all that, like thong bikinis, like Brazilian bikinis.
Yeah, Disney?
Bro, I'm telling
While kids are walking around?
Bro, I'm telling you.
Did you put shades on your son's arm?
At one point, I had to tap the back of his head like, hey, Hendrix, pay attention. You know what I mean? Because he's just like, what is this?
Yeah,
I don't see this.
I don't see Mickey.
Exactly.
I see it.
But anyway.
Naked clad women.
Anyway, yeah, I mean, I'm definitely feeling it, when it comes to purchasing Christmas gifts the way I want to.
Yeah. Well, listen, like I said, they can kick it down the road for a couple months. Short of buying more of these MBS, the Fed is now out of tools to fix or postpone an MBS meltdown. And, I'll tell you something. There is a shift in the composition of the I'm just looking here. Hold on a second. There's a couple questions that are coming across. There are emerging signs right now of fragility in the markets for agency mortgage-backed securities. And a shift in the composition of MBS buyers in 2022 could be a sign that the market has become more prone to bouts of volatility. That's not good for those of you that are still in the market, which, believe me, I understand. I understand you're scared, and if you pull out, you're going to lose a lot of money over taxes. But guess what? If you stay in, you're going to lose even more because go ahead.
No. I was going to agree with you. I mean, hey, listen, it's not where you start; it's where you finish. So, at the end of the day, if you're still in the market, just expect more max pain to pretty much just crush you, potentially wipe you completely out. So it's better to realize the money you have still in the market. That's why there's a 1099 for capital loss, right? That's always an option. I'm not a tax advisor or anything like that, but it seems like it's becoming ever more prudent to get your house in order, pick up some physical gold and silver, realize whatever you have in the markets and protect it and preserve it, because according to what we're sharing with you, it doesn't look like you have a shot.
By the way, what I'm quoting to you right now, Rob, and to everyone else out there, these are actual notes from the BIS. All right. So
yeah, it's on their website.
They're saying, yeah, it is.
It's on their website.
It is, and you can go on to pages 4 and 5. But it says, listen, it says a shift in the composition of MBS buyers in 2022 could be a sign that the market has become more prone to bouts of volatility. Small investors and leverage funds have become the main buyers, and they have been traditionally less forthcoming than the banks, and in providing liquidity in times of stress. And at the same time, monetary policy priorities may make it challenging for the Federal Reserve to backstop the MBS market should the need arise. In this environment, surges in selling pressure could be particularly disruptive.
Yeah.
Listen to what else they state in there. Liquidity disruptions in the MBS market could have material systematic implications. First of all, MBS play a crucial role in facilitating credit to the U.S. real estate sector. In addition, since MBS are near substitutes for U.S. Treasuries, liquidity strains could reverberate more broadly in financial markets. That's coming from the BIS.
In other words, this is a systemic risk that completely crushed the market.
Yeah.
That's all they're saying.
Look,
in a nutshell.
Short-term solutions often become life choices. Short-term solutions often become life choices. And short-term thinking has long-term effects, right? And I'll give you an example of a highly skilled person becoming unemployed. And depending on that situation, the person may take a position doing something unrelated to their skill set to make ends meet. and enough time would pass, and then the person's resume or the person would actually resume and thinking and had a brand new trajectory. And the divergence would make it harder to get hired in their field if their field rapidly changes, like, for instance, let's say technology. Right? And the short-term solution became the building block of choices going forward. So the bond and MBS buy-in frenzy of the pandemic was a short-term solution that changed the trajectory of the U.S. economy forever and became an economic life choice, Rob. And the consequences of short-term thinking forced us to face another sleeping economic dragon. In other words, so there's no guarantees. And past results don't guarantee future performance. And the best we can do is look at the past to predict the future, expecting a pattern to repeat. And most people have lost significant wealth and retirement savings in 2008.
Yeah.
We talk about that all the time.
Yeah.
And believe me, I was there. And the last time the MBS market lost significant liquidity. And from 2008 to 2011, the price of gold more than doubled. And if you had a second chance and knew then what you know now, what we're telling you now, how much of your retirement would you have moved into gold in 2008? And how much do you want to move in 2022? So give us a call at 800-753-8534. We also have a investor's guide that we can actually email to you or send out to you that'll give you a lot of this information that Rob and I talk to you about every day. And just remember, like I was saying yesterday, you want to definitely have precious metals in your portfolio because, if you wait till later, then you may not even be able to do it. You got something? I know you're itching to say something.
Yeah, you got to look from this aspect. Let's dumb this down. Let's make this Barney style in a sense, right? This right now, what we're sharing with people and what we share with people on a day-to-day basis is, if you can imagine, the Surgeon General warning on a cigarette carton, may cause cancer, right? Could lose teeth, could have a hole in the side of your mouth, right?
Yeah.
Could lose half of your trachea, right? This is the Surgeon General warning if you're looking at a cigarette carton, right? This is what we're basically providing you. This is the Bank of International Settlements' biggest warning just yet. This is their Surgeon General warning. So, retirement guide aside, information aside, it's staring you right in the eyes. You're in a position right now where you could ultimately see yourself in the great financial crises times 1,000. So you're going to need gold. Gold doesn't need you. Silver doesn't need you. You need physical gold. You need physical silver.
Yeah. Let me tell you something. Gold has been up all week long for most of the metals.
Impressive, yeah.
Right? With gold up 1.9%. Right now we're
Silver's up. Silver's 12% up in 30 days.
Yeah. Platinum is up.
Platinum's up, yeah.
Right? Palladium is up. So looking back a year ago today, what we're actually seeing is we're seeing metals in positive territory, with gold up 1%, silver up 2.3%, platinum up 8.4%, and palladium up 3.8% right now, right?
Yeah.
And so the whole issue of trading gold for Russian oil, because we've been hearing about, Russia is doing a gold-backed currency, is back in play with the new mechanism that prices oil at 1 gram of gold per barrel.
Wow, petro gold, right?
Oh yeah, 1 gram of oil, 1 gram of gold per barrel of oil. And there's some speculation that Russia could as well offer to raise the stakes to 2 barrels of oil for a gram of gold. Yeah, this is real. And with the imposed cap of $60 per barrel on Russian oil, the implied price of gold would be bumped up from the current levels near $1,800 an ounce to nearly $3,600 per ounce.
That's true.
But look, just because I'm telling you this doesn't mean this is a get-rich-quick scheme. This is a way for you to go on and protect your retirement savings, protect what cash you have that you don't need at this time, that you can actually trade risky fiat currency, which is devaluing. By the way, the dollar is going down.
It's been trading sideways for the last 30 days.
I mean, exactly. And now the dollar's going down, and gold and silver prices and all other precious metals are going up. So this is what we're talking about, and this is why you want to give us a call at 800-753-8534. I'll give you my personal number here in the office as well. If you don't want to talk to a call center, I know I don't. I don't want to call all those people. You got Sandra, Lakeisha, all these different names in there. And, we don't hire these people, but Romeo thinks it's time to go. But, we don't hire these people. We hire the call center, and then they hire these people. So, forgive us if they can't speak too well. But if you want to, give me a call at 800-753-8534. And, I'll tell you something. The beneficiaries of doing what I'm talking about would be owners of gold, whether individuals, corporations, nations, or central banks. And this is no wonder that these central banks now have been purchasing gold at record pace right now.
Well, it's very telling where their head's at. I mean, these are the individuals that create and dictate the monetary policy. These are the individuals who manipulate the monetary policies. And what are they doing? They've been buying more gold in the last year than they ever had in history. Just alone in quarter 4, they've bought more gold than they've ever had since 1974. So it's very telling where their heads are at, because they're ultimately in control of the financial system as a whole.
No, that's so true. That's so true. Hey, did you hear about President Xi? He actually arrived in Saudi Arabia on Wednesday, and they treated him like he should have been. They treated him like royalty, is what they actually did.
Really?
They treated him way better than Biden. I'll tell you that right now. So, and let me tell you. So he went to this. I don't even know how to say the name, but Rada Gulf of China Summit for Cooperation and Development. And this conference now, I think today was the last day, or is going to be the last day.
Yeah.
But the Chinese delegation is expected to sign dozens, and I've heard they did, with Saudi Arabia and Arab states covering energy security and investments. And the conference comes right now at a fragile point in the United States-Saudi relations. And in October, the White House actually pressured Saudi Arabia to delay its oil production until after the November election.
Not going to happen.
Well, Saudi Arabia ignored the request and actually implemented the decrees, right? And the White House then accused Saudi Arabia of siding with Russia and was in danger of losing support in Washington. And now I hear that sanctions are going to be put on China and sanctions are going to be put on Russia because of what they're doing. But anyway, Saudi Arabia dismissed the accusations as a political gambit to avoid bad news on Election Day. And some Democratic congressional leaders actually called for the United States to reevaluate its relationship with Saudi Arabia and suspend all arms sales. Well, a day later, President Biden vowed consequences for Saudi Arabia. So Saudi Arabia took several steps to align further with China. And 10 days after the president's threat, China and Saudi Arabia released a joint statement reaffirming their commitment to strengthening ties and long-term stability of the oil market. And 1 week following the statement, just 1 week following the statement, Saudi Arabia lowered oil prices for Asia while raising them for Europe. And then China, listen, and listen, the only reason oil prices are way down right now is because they drained the strategic reserves even more. But once that is done, then you're going to see prices of oil go back up.
Wasn't there a 25-day runway for that?
That's about right. I think so. I think you're right. I think
that was like a week and a half, 2 weeks ago.
Yeah, yeah. Well, listen, so 1 week following the statement, they lowered the oil prices for Asia, raised the oil prices for Europe. And China then became the big winner. Well, here we go of the price reduction. A few weeks later, the Chinese president now comes to a conference to sign new economic security and energy agreements with Arab Gulf producers. And it seems naive to think that the acceleration of cooperation is a coincidence. No, it's not. This is.
Well, we're talking about the BRIC nations. Your Brazil, Russia, India, China, Saudi Arabia. I mean, they're looking out for each other. That's the bottom line.
Well, here, let me tell you. Saudi Arabia is the recognized leader of OPEC. Leader, you heard me, right? Yeah. And the balance of power between East and West is mainly determined by OPEC oil prices.
Exactly. With
Saudi Arabia yielding most of the power and influence. And in 1974, the U.S. and Saudi Arabia made a strategic agreement called what? The petrodollar.
Yeah.
A lot of people are always asking me about the petrodollar. Well, that kept the balance in power in the West. Well, the U.S. promised military production and cheap arms, and Saudi Arabia promised the oil trade would be kept in dollars. Things are changing, Rob. Things are changing. And this agreement has allowed the U.S. to operate enormous deficits and create unfathomable debt. And the structure of the petrodollar agreement gave rise to the very dangerous modern monetary theory, MMT, that liberal academics think is a good idea. And the basic idea is that the U.S. can print unlimited dollars because it is the primary reserve currency. And except for Iran, for instance, there's no question whether Arab Gulf producers will follow Saudi Arabia's direction. However, despite the hatred and fighting of a proxy war in Yemen, Iran and Saudi Arabia now have formally applied to join the BRICS, which is Brazil, Russia, India, and China, and South Africa.
Yeah, but you have to also look at what Saudi Crown Prince Mohammed bin Salman, he recently expressed that he has the intention to join the BRIC nations. So it makes sense, the report you're sharing with us, it's all coming full circle now.
Well, the BRICS have repeatedly stated their goal to overthrow the dollar dominance by creating a basket of commodity-backed currencies as an alternative for international transactions. So it isn't surprising to me that China just upped their gold reserves by more than we've seen in a long time. Not only that, Russia now is talking about a gold-backed currency.
Yep.
You're dying to say something. Say it.
No, I'm like, all I want to say is that when you weaponize the dollar the way the U.S. has been, what do you expect? Are we really surprised that this is happening?
That's why I'm saying, Rob, there's a lot of things we don't even know what's going on in the background, right? And let me tell you, the writing is on the wall, and the facts actually speak for themselves.
Right, exactly.
Saudi Arabia has applied to join the BRICS. And the Saudis and the Chinese intertwined their economies and openly told the world that they would expand their relationship further.
Right. Yeah.
So economic alliances will last longer than military alliance.
You know what, Alan? We were talking about this 2 months ago. We were talking about
That's
this
right.
when we first started the podcast. And look, fast forward 2 months, and look what we're talking about. It's just how do I put this? We're basically oracles, right? We see what's coming. We see the information. we attack the information, we digest the information, and things in the future become the exact same thing what we were talking about what was going to happen. We're like oracles, right? So it's very important that listeners understand that this is not a game. This is not a joke. This is the exact reason why. If you have other countries right now teaming up because of a weaponizing dollar and wanting to eliminate that aspect of the dollar and create their own, basket of currencies, and they're ignoring potential sanctions because that's what they're doing. They're ignoring it because they're stockpiling physical gold.
That's right.
Right.
That's right.
They're creating a gold-backed currency in Russia. They could care less if there's sanctions.
No,
I
agree with
less.
You. I totally agree.
So it's very key that our listeners pick up the phone and give us a call.
Well, let me tell you, the winds of power are blowing east, which means real trouble for the dollar and the dollar-backed asset.
Yeah, 100%.
Remember I told you, I've been saying this for a long time. We're going to wake up one morning after we've had our sleep, and we're going to find out that the bottom of the dollar has dropped out over in Asia.
Right.
That's where all of our credit, and that's where I see the mass exodus is going to be. And listen, some people, they're in denial and ignore the signs that will drastically change soon. And does soon mean this year, next year, 10 years? The timeline's not really clear, Rob, but the outcome is that the dollar will lose value as more international transactions happen in currencies other than the dollar. And remember, I said at the beginning of this, when I first started this, podcast, whatever you want to call it, I talked about how the U.S. dollar is a weapon and how these allies, so-called allies, and these BRIC nations, they already had envisioned and already started implementing a reserve currency that would get them out from underneath the dominance of the dollar, of the U.S. dollar.
Right.
Well, it's happening. And let me tell you, gold doesn't change molecularly. What's the word? Gold doesn't change. You could melt it, and you still have the same number of molecules and the same weight value.
Yeah.
And 1 ounce of gold is the same as 1 ounce of gold 100 years ago.
Yeah.
Right? It doesn't change, making it a great measuring stick of the dollar's purchasing power.
Mm-hmm.
So in 1913, the price of gold was $20.67 per ounce.
Yeah.
In 1913.
Yeah.
And at the time that I'm saying this, an ounce of gold right now, what are we at, 18?
1805 on the spot.
1805 right now. So gold did not grow in value by 8,606.86%. The dollar lost that much purchasing power. Remember, I've always said the purchasing power of the dollar is being destroyed right in front of your faces, and you're not even paying attention to it. So the things to understand is that when the dollar loses purchasing power, what goes up, Rob?
When the dollar loses the gold.
Yeah, gold and precious metals.
Yeah.
Precious metals go up. So suppose President Xi Jinping's visit will further cooperation between OPEC and the BRICS. In that case, the question becomes, do you believe that the long-term results will be stronger or weaker? Will it of a dollar, right? And if you think the dollar weakens, then you agree that all dollar-denominated paper assets are at risk.
They get that.
And what will you do to protect your purchasing power? That's why you want to give us a call at 800-753-8534 or 323-380-5485. I'm not sure if I gave that number out, but 323, that's my personal number in the trading office. Rob, you want to give your number?
Yeah, go ahead. Give me a call at 213-466-1283. 213-466-1283.
This is why I love this business. It's like, thank God I have gold, silver, platinum, and palladium, because when things get upside down, I don't have to worry about it because I have something to fall back onto, and I can always exchange this for more value later on.
That's true.
And that's what you get into this for. You can always exchange this for more value later on, because as everything else goes upside down, gold prices and silver prices tend to rise.
I mean, right now you got to look at it. There's a triple threat that's happening right now. That triple threat you have is central bank digital currency. That's the number one threat.
CBDC.
CBDC.
And C-Day is right around the corner.
It's next week.
I've been seeing a lot of things from Jim Rickards. He scares the hell out of me. I'll be honest with you, Jim Rickards stuff.
Yeah,
but C-Day, and Rob, that order 14067 clearly indicates in the order that if the dollar is to remain the dominating currency, that a digital counterpart is needed.
Yes.
Well, I think they're a dollar short and day later or something. A day later, dollar short, something like that. I think they're behind because, the United States, you guys, is always last.
Yeah.
We always come in last. Remember, we're always the last ones to get the COVID. Kind of weird. But anyway, that being said, so we don't want to get kicked off again. But, that being said, here we are at a time when inflation is high, dollar's going down, headed into a recession. All the banks are now saying that we're headed to a recession.
You have all these threats, and you have all this potential fallout with the dollar. You have financial turmoil. You have a potential systemic risk with these synthetic shares, these derivatives, these unaccounted loans, these MBSs. You have the 2.5 quadrillion. You have the BRIC nations. You have CBDC. You have
the writing's on the wall.
Yeah, it's right. It's right there in front of your face. And the only reason why you won't move into physical gold is because you're scared, or you're hypnotized. You're a sheep, and you will get slaughtered.
So true.
Yeah.
So true, Rob. And there's so many ways that you can actually go about protecting yourself if you have a retirement account. Thank God we have a way. Here, let me explain something to you. So the IRS requires that custodians, because we were actually going to become a custodian, but then there's so much, and you got to have some really deep pockets in order to be a custodian and offer an IRA, because each and every person that has an IRA with a custodian, the custodian has to have some type of bond on it. Now that's in
like
this
a $25 million bond.
This is, each person has to be bonded. Now I'm not sure how, with like EJ, Edward Jones, Fidelity, Schwab, these guys, there really is no guarantee, because you don't have a guarantee on a stock, a bond, or a mutual fund. Boy, Rob, you are smoking that stuff. It came all over me. But Rob likes to vape. But anyway, that being said, like our custodian that we use is called Advana, very conservative group like ourselves down in Largo, Florida. And they actually have more than $3 billion under management. But it isn't just gold. They also have real estate. There's so many things that you can do with an IRA that's called a self-directed IRA. In fact, one time, Forbes was calling this the safest retirement account in the country, and I agree with them because...
Listen to this. The safest account that all wealthy people have.
Yeah.
Is a true self-directed IRA.
You're right. All wealthy people.
Not to be confused with a self-managed brokerage account or self-managed IRA. A self-directed IRA flex account allows you to have the options of crowdfunding, commercial real estate, farmland. You actually have over 327 different investable IRS-approved and regulated options in this account. So I mean, you have many of options.
And here's the other thing. So when you have one of these type of IRAs, which we can help you with our custodian to get into that, we're not the ones that actually issue the IRA. Just so
Advance does.
We're the ones that actually are able to get you the gold and put it in your IRA at a wholesale price.
Yeah.
Then our partners do that, because you have to be licensed by the IRS and you have to have a CISP license, all that. That's their job.
Yeah.
We just kind of move it along. But here's the beauty of it. You don't pay any commission. So if your account goes from $0 to $10, you don't pay any commission on that $10. You have a
maintenance fee.
Yeah, you have a maintenance fee that can actually be waived as well for several years. Which, if you give us a call, we can explain that to you. 800-753-8534, 323-380-5485 if you haven't already gotten it. or you just go to UnitedGoldGroup.com. And we got a lot of changes that are getting ready to happen. We have the new studio that's Man, you can hear them back there.
I know. I get excited. I get here at 6 in the morning, and they're out there working. I'm just like, man, that's going to look really cool.
Cannot wait. Because instead of like flipping us back and forth like this to this to this to this,
Yeah.
getting dizzy, we're actually going to be all seen together and communicating. We'll all be sitting on a couch, maybe drinking espresso, 3-shot espresso.
Man, you like that espresso, huh? You're hooked.
I do. It actually, at my age, you'd think I'd already been drinking coffee.
Yeah.
62 years old.
Yeah.
No. Hey, so anyway, getting back to it, the self-directed IRA is the way to go. You don't have to be wealthy to have a self-directed IRA, but you have to be smart, because when you can take your 401k or your IRA and move it tax deferred, now when the market goes upside down, like the banks are saying, the recession, and remember, everything was transitory, and then we found out inflation, and now we're seeing inflation go higher, and we also see next week, most likely, numbers are going to go up again.
Let me be very clear, right? This is the big problem, right? If you're not a financial expert, if you don't understand fundamental analysis, or if you have no idea what technical analysis is, right, you're going to get completely slaughtered. You're going to get just crushed with your retirement savings. Like, your expertise was driving truck for 20, 30 years. You were a nurse for 40 years. You were a school teacher, whatever the case may be. You're not a financial expert, right? You don't understand how to navigate through the financial markets, especially during a bear market, right? Because let's be honest, I could have gave my 10-year-old nephew a dart. I could have lined up many mutual funds. I say, go ahead, blindfold them. Oh, you're in the Fidelity Mutual Fund for the next 10 years. Guaranteed winner got a bull market, right? Oh, you're in the TD Ameritrade Freedom Fund, or whatever the case may be. So, during a bull market, you look like a financial wizard. But the reality is, with this fake money being injected to Wall Street, with this helicopter money pumping the market, everybody's a financial expert. Everybody is a financial analyst, and they could pick the right stock or pick the right mutual fund, or whatever the case may be. But during a bear market, you really see who understands the financial system and how to navigate as an expert, which our listeners, the people that we help out, are not.
You've heard OJT, on the job training.
Mm-hmm, yeah.
It's so funny because when I first met Rob was a boxer.
Yeah.
He'd beat anybody's ass. He'd just wait for you to say something wrong. Right? No children. And then it's like this industry just totally changed, Rob. He became very educational through OJT,
mm-hmm.
and you learned a lot. And what I just heard you say, you're spot on.
Yeah.
You're spot on with the printing of the money
mm-hmm.
and everything that's going on. And, here's the thing. Survive the storm.
Yeah.
The tsunami, the wildfire,
mm-hmm.
whatever you want to call it. It's like burning your kitchen down, right?
Mm-hmm. Yeah.
And then not being able to cook.
Yeah.
So survive this storm. You can always get back in, because the beauty of an IRA is that you can move funds back and forth tax deferred without being taxed. Of course, that's what I mean. By keeping it within the retirement. You're only taxed on your money when you take out the money for your own personal expense. But with a self-directed IRA, it's really cool. And I'm not a self-directed IRA salesman. I'm just telling you what it is. You could have your money in gold and protect yourself. You could have your money in real estate, or you're driving down the road. And remember this, real estate prices are going down because interest rates are going higher, right? So you can really pick up some fine properties at a low price when you have cash. So doesn't it make sense for those that have these IRAs? And by the way, you can be any age with an IRA. to move an IRA to another IRA. I've got 40-year-olds, 30-year-olds that have IRAs.
Yeah, me and Hunter, we just helped out Wheaton, who just turned 31 years old. No,
Don't mention name.
No, that's the city he's in.
Oh, okay, Wheaton.
Yeah.
All right. I didn't know if that was the name or whatever.
Yeah. So.
But that's good because that individual now, you know,
he's 33 years old.
Oh, okay, 33 years old. He does not even, as of right now, the age is with the new Secure Act 2 that's coming into play. The new age is going to be 75. So that means you're able to
so we went from 70 to 72.
No, 72. It was 70 and a half, then it went to 72.
Now it's 75.
And now it's at 75.
Man, they just want to keep that money
trapped. They just
trapped.
want to keep that money in there and keep, build the pie up bigger and bigger.
When did this happen?
This is coming. This is all being voted on.
My head hurts now.
Yeah, it's called the Secure Act 2. Google it. You'll see a little bit more about it. So that being said, he's able to build it up. And then here's the thing. So he's driving down the road, and let's say you got $100,000, and then the gold went up another $100, $200 an ounce. He's driving down the road, and he found this property, and it's like, damn, that's a nice piece of property. I can buy that cheap, but I ain't got the cash.
Yeah.
But I got it in gold. So guess what? You can actually liquidate that gold, exchange it for more value later on. You can exchange it, and you can actually have another IRA that you can actually put into real estate. So you can actually have a self-directed IRA in real estate, and a lot of wealthy people do this, and this is how they become wealthy.
Well, guess what? We just did that with Marina Del Rey.
Awesome.
Yeah.
Awesome. Yeah. So listen, I hope you all got a lot out of this. I want to share one last piece of news, and you know, I'm not a hater, but I don't like that our government hires people to handle nuclear waste energy codes and things when you have Biden's Department of Energy pup handler. And the reason I call him a pup handler, because if you look at him, and I won't even show it because it makes me sick, but he's got these boys with these leather dog mask on, and he's standing there with a dress on with red lipstick and a bald head. And he's charged now. Listen to this. We're talking about Britain. And I know after tonight, Hannity and Tucker and Ingram, they'll all be saying, it's so funny because after I say something, it's like I see it on that show that night. And I'm like, oh, that's old news to me. Yeah. But listen, he's now been, you ready for this one, Rob? He's now accused of stealing luggage from a Las Vegas airport. And it's not just that he's been accused. So check this out. I just want to show you the photo. There you go. There's his pups. Oh, my God. Damn, Daddy, that one shirt says. And now this guy, now keep in mind, this guy was the one, Rob, that was secretary of the Department of Energy, nuclear.
I'm aware of what he does.
What could go wrong with that?
Yeah.
And you know, if he's a thief, if he's a felonist, an alleged felonist.
This guy's a kleptomaniac.
Well, let me share something with you. So Joe Biden's gender-fluid pup handler, Department of Energy employee Sam Britton, was put on leave after he was charged with felony theft for stealing a woman's luggage last month at Minneapolis Airport in Minnesota. Well, Britton, again now, is being accused of stealing luggage from a Las Vegas airport. And KLAS learned this on Thursday. So guess what? A felony warrant. A felony warrant was issued for Sam Britton for stealing luggage from Harry Reid International Airport in Las Vegas. Whew, this is scary because he's got a lot of knowledge. He had like special clearance and all that kind of stuff. So Britton now was reportedly charged with grand larceny with the value between $1,200 and $5,000. So an energy department official is accused of stealing luggage from Harry Reid International Airport. He must like women's luggage. I wonder if this was a piece of women's. I'm going to go in further with
first Minneapolis, now Vegas.
Yeah. Shame on me once, shame on me twice.
This is what we're aware of. This is what we know. It could be multiple things.
He could be a kleptomaniac, and he's been getting away with it, but now Eyes are on him, right?
Yeah.
So listen. So an Energy Department official is accused of stealing luggage from Harry Reid International Airport. The Channel 8 News investigators learned on Thursday. And a felony warrant was issued for Sam Britton, a deputy assistant secretary, is what sources said, that the charge is for grand larceny. Oh, this is prison time. With a value between $1,200 and $5,000, records show. And Britton now faces a charge for a similar incident in Minneapolis. He was on leave after charges were filed in connection with that incident, which is an Energy Department spokesman said in November. So Sam Britton, if you remember, took a woman's bag from the baggage area at Minneapolis Airport on September 16th. And Britton reportedly removed the ID tag from the blue bag, quickly left the area, and jumped in an Uber. Now, who paid for all this, I wonder? Or tax money, I'm sure. So Sam Britton didn't even check a bag on that flight when he came in. So he had no business at being in the baggage claim area. And according to the complaint, Britton returned to the Minneapolis airport with a stolen blue bag on September the 18th, where he caught a flight to D.C.
Unbelievable.
And the female victim said that the contents of her bag are valued at $2,325. I wonder if they put, wow, that's decent. Yeah. I wonder if he's got a closet. Bag. Anyway, so Sam Britton last week requested his preliminary hearings be held remotely due to financial difficulties traveling between D.C. and Minnesota. It looks like he's going to have to maybe get arrested and go to Las Vegas, because if there's a warrant out for his arrest.
No. I mean, as long as he makes the, because everything's remote now. As long as he makes that court date, even remotely.
No, I'm talking about Las Vegas now.
Are they the same day?
Well, I don't know. According to the National Pulse, Sam Britton enjoyed a taxpayer-funded salary of listen to this number, $178,063, which is in the top 1% of government salary.
Wow.
So Britton also got a top secret Q clearance along his $178,000 salary.
Wow.
I mean, this guy, no joke. This is who we were paying. Look at that. This is from the Gateway Pundit. That's my friends at the Gateway. And the Gateway Pundit, I'm telling you, they delve into some interesting stuff.
Yeah.
But anyway, the bottom line is this guy,
it's embarrassing that this is a representative like somebody.
Well, think about it, Rob. A felony warrant is issued for this guy in Las Vegas. That means that he can be, I think, if it's a felony and they know where he's at, they can arrest him and then have him extradited to Las Vegas to face charges.
Yeah, that could happen.
Yeah. I mean, it looks to me like they're finding out a lot of things about him. I wonder if his husband knew about it. Anyway, you guys, great talking to you. Give us a call. Also, remember, we have a guide that can actually give you more information on how to invest and why to invest and where to invest.
Just keep in mind, it's not about the information, it's about participating and getting your house in order, but we do offer a retirement guide for sure.
That's right. We just want to show you how to get your house in order. And also, listen, tell your friends about it. We see a lot of new people coming in. I mean, we're no giant thousands of viewers out there yet, but this is new to us. We've been playing with it for the last few months, in this tiny little claustrophobic room. It's driving me nuts, but, and we're not streamers on the street. I'm going to talk about them one day. Those people are crazy out there. I don't even know how YouTube allows that stuff to go on, and I get censored for saying something about COVID vaccine. It's crazy. But anyway, that being said, God bless every single one of you. Tune into our channel. We're on Rumble. We're on YouTube. We're going to be on a lot of other platforms, Twitter, a lot of different things. And I look forward to seeing you on Monday. Be safe.